Good morning, Nick Ogden.
Good morning, everybody. How are you over in America? It's heading towards tea time here in Europe.
Well, hey, that's a good time to be heading towards.
Okay, so let's just start off with, a thought. And I've been very, very fortunate to have been involved in a number of different, I guess, all started as tech startups. And all of them started, I guess, with the same two words, what if? And if I was to say to you, what if I could sell that piece of cable, that connector, that serial to parallel interface to an American company for $40 billion plus, you'd probably say, well, actually, if you can do that, Nick, you can come and start working for us, or you can sell stuff for us. But if I look back through the innovation I've been involved in and the things that we've achieved over the course of the last few years, that was the piece of cable that created WorldPay. Back in 1995, we had a PC, a 486 PC, which we lovingly called Zippy. And sitting next to it was an X25 switch. And the challenge wasn't the software on the PC or the X25 software working. The challenge was to connect the two devices. And connecting the two devices allowed us to build an online shop. And that online shop led us to create WorldPay, which was, as you probably know, was acquired by FIS last year. It was an interesting journey. During that journey, we had to do a number of things. Our first customer was the Diana Memorial Fund back in 1997. And in 2001, we had to invent a thing called the Internet Payments Guarantee to give consumers confidence in the systems that we were building and developing. So sometimes innovation is actually the cables you need to connect things, and of course the ideas of how to actually get the cables to work. If we jump ahead to 2008, and I did try and reduce the size of the little newspaper clipping relating to the global financial crisis. Innovation quite often occurs out of a coincidence. And you might think that that's quite interesting because we're living in a period of coincidence right at this moment in time. But what happened in 2008 and 2009 was that the European Union had been looking to effectively open up the markets. This is before open banking. And we had on one half of the table a global financial crisis with, if you like, the suppliers of access to new markets and to support innovation were tied up dealing with those issues. And regulatory change coming from the opposite direction in relation to the European Union and all of the regulators through the EU saying, look, we need to open up the market, we need to create competition. And so sometimes you get interesting positions in life where the regulation that's required arrives at just the wrong moment in time. Because had we not had the financial crisis, open banking would have occurred probably a few years ahead of where we are now. But because of the global financial crisis, it effectively got delayed. And it got delayed into early in 2000 and I guess 2012. And this was a response really then to the fact that what everybody thought was going to start to happen, there'd be an opening up of services, an increasing range of delivery of financial service supplies to both consumers and business users, hadn't really happened. And there was clamoring from people saying, look, what's going on? It's the financial services industry is not responding to the market opportunity that the rest of the world can see. If you look at the way that Google started to develop its search engine capabilities in the late 1990s, all right, their ability, all right, to deliver search was pretty much instantaneous. Yet even today, our ability to effectively deliver a bank account instantaneously. So if we then look at what effectively happened as a consequence of open banking, many of these firms on this list didn't exist 8 years ago. That's the rate of change that we've seen within our industry. And going back to this slide, it had Ant Financial, which of course lost the word financial pre its IPO, which unfortunately is not moving forward. But a whole range of different businesses move forward to embrace the opportunity of open banking. What were they trying to do? Were they trying to disintermediate the core banks? I don't think they were. There's often a view that everybody was ganging up to have a go. What they were trying to do was to deliver solutions in a more elegant way and a more timely way, and with greater customer service efficiency to a marketplace. And effectively, if we can jump onto the next slide, that's what started to happen. And if we look at why that's happening, this slide, the counter on the left-hand side, shows a number of $2 trillion US dollars. And we started that counter running at 0.001 second on the 1st of January this year. And the reason why we started that counter running was that if you look back to open banking, look back to innovation, look back to what customers are looking to achieve, financial friction is what stops them achieving the objectives of their engagement with the institutions they're talking to. And I had a meeting in Washington, D.C. last year when we were still allowed to fly around the planet at the World Bank with the IMF, and we were talking about financial friction and its impact on the global payments environment. You know, and every one of you will know that the most frequently asked question in your branches and in your head office and in your call centers is, where is the money? You know, we often don't know where cash is. And whilst there's great developments going on in North America at the moment in relation to improving systems, both the clearinghouse and the Fed Now initiative looking to improve speed of transactions are still relatively slow. So we worked out last year that the financial friction cost just associated with international payments was about $2.6 trillion. And in the meeting in Washington, D.C., one of the guys said to me, he said, actually, Nick, I think you've got the wrong number. And I said to him, I said, look, it's very, very hard working out on a smartphone calculator trillions of dollars. And he said, no, I think the number is wrong. And he said, I think the number is higher. And they came back with a number in December of last year of $15 trillion a year of financial friction. Now, that's a huge number. We actually can't get that to run on our little real-time clock, all right, because it goes round too quickly to really understand what's going on. But every single one of us, and if you take off the, your role today as bank executives, at the end of the day, you're also consumers. All of us are impacted by the financial friction and the cost that effectively applies onto our economies, onto our businesses, and onto our personal lives. And it can be measured in a number of different ways, from how long it takes to open a bank account, for how long payments take to move, to how long it takes to be approved for a loan. Every single part of our financial services marketplace is constrained by financial friction costs. And if we jump onto the next slide, please. And if we then apply all of that, all right, to what's happening today, the world has become a face mask, for want of a better description. The pandemic has changed the way that we all live. I used to enjoy going to Washington, D.C. A lot, and going to various other places in America. I used to travel 6 to 8 times a week. And since March of this year, I haven't done that like many of you. But is this bad or is this good? I remember back in 1996 talking to a guy who some of you will know called Jim Clark, who founded Netscape, one of the original browser technologies. And we were talking about how rapidly the internet was developing in the the early stage of the internet era between sort of 1995 to 2000. And we conjectured that probably an internet year, or a development year, was around 3 months. All right. And if you remember back, or if you go back and look at the history of the internet from 95 through to 2000, it was a phenomenal change. In 1997, when we ran the Internet Diana Memorial Fund, we didn't have internet fraud and we didn't have chargebacks. Yet, as I mentioned earlier, by 2000, that had significantly changed, and we had moved into a marketplace where we did have fraud, we did have chargebacks. I think the pandemic has done two things. I think that it's given a digital education to the world, which we couldn't have done through natural forces. There's not enough marketing dollars, there's not enough PR time, there's not enough news media, there's not enough innovation events to have captured the digital demands that a pandemic created on our planet. You know, every single person on this planet has probably been exposed to video conference. It's what we're using today to do this conference. It's what we do every day now to deliver conferences and talk to our colleagues and our customers, wherever they may be. And interestingly, what's happened is there's been an increase in efficiency in relation to how we deal with our customers and how we deal with our potential clients, because we're available and we're always on. And the friction that we had in relation to running to the airport, jumping on a plane, arriving late at night, checking into a Hyatt hotel, getting up early in the morning, rushing a breakfast, finding a cab, going to a meeting for 2 hours has gone away, it's disappeared. Yet the time that we would have spent on that journey is still with us. And so we're able to redeploy that. And I think that over the course of the next few years, when we were looking, last year I was predicting that you know, we would be looking at 2030 for various events to occur in a conversation with KPMG, the accountants. I actually think that's going to right shift, and we're going to be back having that innovation arriving in 2025. And a lot of these innovations are already starting to happen and already starting to be delivered. Look at the amount of cash that has been displaced by contactless payments in the course of the last 8 months. Look at how businesses have had to respond to getting loans. All of these things are changing. If we just jump on the next slide, please. If we then start to consider what new technologies have arrived and how we're going to transform and how things can transform. I remember in 2014, sitting in a meeting in Threadneedle Street with the Bank of England. And I was talking to them about ClearBank, and ClearBank was and is a new bank in the UK, and it was designed to support other regulated businesses. And we were explaining to the regulators, I'm certain you go through a similar process in the USA. In fact, I know you do, because we were asked to do some work and have done quite a lot of work with the Federal Reserve Bank. We were going through explaining, you know, what the bank was going to do, what our customers were going to do. And then we get into the thorny question of location. And I was asked this question, and they said to me, Nick, please can you tell us where your bank is going to be? Where are you going to build this bank? And I said, I'm going to build this bank in the cloud. And they all looked out of the window. It's a true story. And they looked out of the window because they didn't understand. And this is 2014, 6 years ago, 5-6 years ago. They didn't understand the impact of cloud computing. They didn't understand, and there was no requirement for them. They're regulators after all. There's no requirement for them to understand where cloud computing could go to. It's for people like us to see where these technologies can be delivered, understand the benefits of them, understand how we can mesh them into our organizations, understand how that can then change the engagement that we have with our customers, the services we provide, and our ability to be always on. Over the course of the last few years, cloud technology has transformed the way that financial services and data movement is delivered. I'm not going to sort of tell you who we work with. You can work it out or find it out from our website. But the cloud technology that effectively we are now working on did not exist 2 years ago. You know, within my current new startup, RTGS Global, we're achieving something called atomic settlement. And atomic settlement basically is clearing funds globally between New York and Sydney, Australia in 50 milliseconds, and clearing that in central bank money using synthetic ledgers. That was impossible 2 years ago. You could not even think of doing that, all right? Yet that technology is now capable. The ability to do atomic settlement linked to real-time central bank liquidity, linked to real-time commercial bank money, has a massive impact in the way that payments and transactions and payment schemes operate. It means there can be capital changes. What used to be regarded as risk-weighted assets can now become HQLA, which has a direct bearing on CET1, which has a direct bearing on the budgets for CIOs. You'll be delighted to learn. And I can't see the audience, but I'm certain there are a few smiles at that point. The time now for change is really with us, and it's been accelerated, I believe, by the global pandemic. Never before have we had a situation whereby we can focus, deliver, execute, communicate, use visualization technologies, using whiteboards and various other systems to actually engage with our team, drive our teams forward, and get to a point where we can deliver new systems, new innovation, new infrastructure, and new benefits. But there is an option. There is always an option in relation to innovation. And I'll finish my presentation now with my last slide, which I think sums it all up, and I'll be happy to answer questions. Last slide. So we have to change.
Thank you very much indeed, Nick. Much appreciated. Just before we do sort of, obviously, if you have any questions, please do raise your hands or bring up as soon as we possibly can. Regulation often given as an obstacle to banks' adoption of innovation. But if I just pick Formula One is regulated up the wazoo, but it's incredibly innovative. So what actually is holding banks back?
I think that the last 10 years, there's been a sea change within the regulators. I've spent, over the last 12 months, I've spoken to 44 regulators about work that we're doing in relation to atomic settlement systems. All of them have been a bit surprised by the conversation. All of them have had to be taken through the process that we're building and developing. And we gave at the end of each of those presentations an option to the regulators. They could either confirm that we were able to continue conversations with commercially banks that they regulated, or they could say, look, come back and talk to us a bit more when you've got a few more ideas, when it's a bit more baked, or don't go and talk to our commercial banks. And we agreed that we'd respect whatever they said. We got green lights from every single regulator that we spoke to, including the Federal Reserve Bank. And I think that it's what you do. I think that there's a fear of regulation. I think that there have been some hiccups. There have been some problems. If you Google any bank in the world, there's been some issue over something, and it's the cause of finance. Whether those issues were right, whether they're wrong, isn't for me to decide. But what I do know is the technology that we're all now developing is designed to avoid those pitfalls. And if that's done hand in hand with the regulators, then the issue for banks in engaging with regulators changes. We have open dialogue with our regulators, all of them, all over the world. I think that it's the fear of them saying no, as opposed to asking them the question where they might just say yes.
Absolutely. I have loads of questions, Nick, but it's not about me asking questions. It's about our audience. So I'm going to go. I think we have Mike Butler. Mike, are you there, sir? Good morning, Mike.
I'm here.
Hi, Mike.
Hi.
What's your question?
Nick, I have a question. You were talking about how we've gotten this efficiency from not having to travel as much. And one of the things we've been talking about in banking such a relationship-heavy business, when I talk to people about what else has changed with digital, one of the things we've talked about is we've lost the face-to-face interaction. So the story you told was you might go and you might do all this traveling, you'd have a 2-hour meeting. But one of the things we talk to our sales teams about is from that 2-hour meeting, they might have then grabbed lunch and been able to build a relationship. So it feels like there's been an efficiency trade-off, and the trade-off was with relationships. So what do you think over the next few years? How does the technology and the people rebalance? What does that look like?
That's a $1 million question, because of course COVID rates are going up and up and up, and you guys know that better than we do. I don't know. I think there's some interesting things that will come out of this, because people keep saying, why do we need bank branches? Why do we need that and all the rest of it? Well, actually, in relation to bank branches having multiple purposes, they could actually become, a meeting place and a hot office spot site for new business entrepreneurs. I also think there's no reason why, relationship managers can't jump from their home onto calls directly with their customers, because at the end of the day, relationship management is about that customer experience. And I'm not certain whether missing lunch is actually that critical. But I'm a European guy, so we have a different view on this. I think that it will come back, but I think it will come back in a different way. I think that I don't believe that we will ever go back to the way that we lived before, because we've moved on. And whether we like it or not, that's happened throughout the whole of our lives, the whole of our existence. So I think we've moved on. So I think part of the near new is how do we change and challenge that engagement and get back, the social things. I mean, I had a meeting a few weeks ago, and we actually had a physical meeting, and it was really strange because at the end of the meeting we actually didn't know what to do. So if you find the answer, please let me know. But it's an interesting one, and I think it will be a learning for us all when we get back to, what is the new norm, which isn't the old.
Thank you very much, Steve. Mike, do you mind if I ask you just quickly, just sort of put some context around this? In your career in banking, what do you think has been the single biggest disruption?
Oh, there are two big ones, and Nick hit them. Was the financial crisis, and it did slow down the world, if you ask me, in terms of innovation. And then the next biggest one has been this one. I think the pandemic has accelerated innovations in the banking space. Specifically, digital transformation has been huge. Although the part that I keep in mind is that I was on a meeting right before this. Just getting people ready for what is a second wave of the pandemic. And we were talking about how do we deal with digital fatigue? How do we deal with connectivity? How do we deal with all that kind of stuff? So I think it's really interesting what's going to happen in the banking space with digital innovation, but then trying to continue to connect and work with people is I think the challenge we've got in front of us.
Mike, thank you very much. Really appreciate it, sir. Thank you much. I hope to speak to you again over the next 3 days. Thank you very much indeed, Mike. Up next we have, I believe, Mel Reyes. Mel, good morning.
Good morning. How are you?
Yeah, very well, thank you. And yourself, sir?
I'm doing well over here on the West Coast.
Lovely, lovely place to be. What's your question for Nick, sir?
So Nick, I know that the technology advances between blockchain and AI, raise concerns and help concerns with regulators. But where do you see open banking coming into play in the next few years?
Okay, let me touch on two things. One, I actually presented the Basel Committee on cyber and all of that stuff about a year ago. And I think the jury's still out on all of that. I think that everybody's still learning. And one of the points I made to the Basel Committee on that was when we go to consume cloud services, they're from different vendors doing different things, as opposed to if you're building a data center and they say, you need to be diverse with your telecoms cabling, that's very easy to do. You just go and buy a load of different telecom lines from different suppliers, and that resolves that concentration risk. In relation to open banking is really interesting. I was at the launch last year of the Nesta, which is a UK government initiative to actually encourage businesses to invest and develop solutions for consumer open banking. We did the presentation in London. We were giving away £1.5 million, about $2 million of incentives and grants and prize funds. And one of the people in the audience asked me whether open banking meant that the branches were going to be open on a Saturday morning, because that was the utility that they felt that would be most useful to them, as opposed to some other application effectively on their smartphone. And if you think about it, perhaps open banking isn't the greatest word to describe what we're doing at the moment. But I think open banking allows you to spread out the innovation and to spread out the access and allow people to develop new services and come at things in new ways that you can't always develop in-house. And I think that if you look, today in the UK, we still don't have a thing called a family account. You cannot go and set up a bank account with any of our CMA 9 banks, which will allow you to move money easily to your children, allow your children to use a debit card product, either physically or virtually on a smartphone, for you to pay them pocket money, for them to open savings pots to save their money in. That doesn't happen. And to do that innovation within a bank is a huge task. But for a fintech to do that innovation and to deliver that to the market and to support that back end through open banking is a far easier and actually a far less costly task than a bank doing that innovation itself.
Thank you very much indeed. Thank you, Mel. Much appreciated, sir. Take care. I hope to speak again over the next couple of days. Thank you very much indeed. And up next we have Kavita Rao, I think. Kavita, hello again.
Hi there. So it's a really, really interesting topic. I am going to go back to regulation-related question. Basically, how do you balance, right? And tomorrow is one of the meeting with OCC, so it's fresh in my mind. How do you balance innovation versus, what OCC is asking you? Obviously, my agenda is to automate everything, and OCC asking for, hey, where is your paper trail on the change management? So, it's such a wide gap between, what is expected of us in terms of regulation and where we want to go. And, obviously you mentioned 40 plus regulators you have met. How did you bridge that gap? And, what was the biggest challenge over there?
I think it's the same challenge that we face in all of our business, and actually it's customer service. So how do we, as financial institutions, I'm director, I founded a UK prudentially regulated bank. How do we treat the regulators as a customer, as opposed to saying, actually, you guys live in Threadneedle Street, you are the regulators, and I've got to be frightened of you. How do we embrace them? And if you start to think about what we have to do for the regulators in relation to reporting and data and all the rest of it, it's not very efficient, it's pretty clunky. And so one of the things that we developed when we were talking to the regulators about RTGS Global was actually saying to them, look, what we're going to do is we're going to give you a regulatory interface. And they said, why do we need one of those? And we said, well, actually, it shows you where the money is. It shows you the interbank liquidity. It shows you the domestic liabilities that banks that you prudentially regulate hold. It shows them the multi-currency assets that they've got. It allows you to take a view in relation to the risk of assets they're holding, and it allows you to actually then potentially give them a capital uplift. And one of the guys that we presented and talked this through works in the Federal Reserve Bank in Washington, DC. He said to me, he said, Nick, he said, if we'd had this in the global financial crisis, it wouldn't have actually stopped the crisis happening, but it would have allowed us to unravel it much more quickly. And I think that's true. And so what you've got to do is to find ways to present to the regulators in the way that you're developing innovation for your customers and internally within your own MI back to them so that they can understand quickly and easily what you're doing and the reasons for doing it. And yes, it's going to be a journey. Yes, it's going to be difficult, but I have to tell you, it's a journey worth taking because when we showed the Brazilian central bank the fact that they could see online all of the international payment balances of all of their banks, they couldn't believe it. And when we showed it to one of the other central banks for one of the G7 countries, they said, if this works, we'll mandate it for all of our banks because it makes it safer for them and safer for us. So I think you've just got to embrace them, take them on the journey. And, I don't think they'll say no. They may question lots of things, but they absolutely know they have to change and embrace the same technology that you do.
Kavita, that makes, you're nodding, good, okay. Because if that makes absolute sense to me, but sometimes I sort of, obviously outside, I worry about it. Oh, well, thank you, Kavita. Hey, Puneet. Puneet, how are you, sir? Oh, we have another question from Puneet. Puneet, what's your question, sir?
Well, I think Kavita beat me to the question, but Nick, first of all, thanks a lot for sharing this viewpoint. I mean, really appreciate it, yeah. So as you embarked on your open bank concept, right? I mean, I understand the regulatory partnership you had, but were there any key lessons learned, Nick, you can share with us in terms of, when you embraced on the journey, there were a couple of things which were key salient points to, I wouldn't say win over the regulators because that's almost impossible, but satisfy them, right? And keep them at arm's distance in a very positive way.
Yeah, I think finishing with your last sentence first, if that's okay. My advice is do not keep them at arm's length. It's just, that's the way it used to work. That's not the way it needs to work going forward. And if you want to achieve a structural change in a market as big as North America, there's got to be a collective go forward. And that I firmly believe that. I mean, when I set up ClearBank, I was having coffee at a conference in London in March of 2014 and talking to Mary Stark, who was the interim payment service regulator. And we were just talking about all things. And I said to her, what are you talking about at the conference about? And she said, I'm talking about access for the financial services industry to the payments infrastructure in the UK. So I cheekily said to her, well, that's going to be a very, very short presentation because there isn't any. It doesn't exist. You know, you've got the main banks were managing the networks and operating the networks and providing that service because of the historic mergers that have gone on in the UK. And the smaller organizations can't get access to it, so you have to change it. And I said, my view is that the reason why we haven't had a new clearing bank in the UK for the last 250 years is that there is either a political agenda that prevents that happening, which, you know, we all understand how politics work, or may not, but anyway, pretend to, or there's a regulatory reason why that's not allowed, but I don't know what that is. But anyway, if there's not a political reason and there's not a regulatory reason, I'd love to have a crack at doing it, because I think there's a market opportunity to build a brand new bank for the UK operating on modern technology with modern working practices in a way that doesn't exist today. And that wasn't saying that the way that existed to the operation of the UK market at that stage was in any way a cartel or anything like that, because it wasn't, and it never has been. And effectively, Mary came back to me about 3 weeks later, and that was an outstanding position to have, because everybody who's listening to this now has been to a conference, met very interesting people, and after the conference, they evaporate and disappear, and you never hear from them again. But Mary had been around the Treasury, the Competition and Markets Authority, all the UK regulators, and said she'd met this idiot guy called Nick Ogden who was talking about a clearing bank and wondering why one hadn't been set up before, and felt there was a political or regulatory reason. And she said, I don't think there was one. And she said to me, when she called up, said, there isn't one. And actually everybody I've spoken to thinks it's a reasonably good idea. So if you want to move this forward, here's a contact at the FCA, which is our Financial Conduct Authority. Go and talk to them. That's what I did.
Thank you, Nick. Thank you, Puneet.
Thank you, Nick.
Much appreciated. Up next, we have Miguel Encarnacio. Hey, Miguel, how are you, sir?
Good morning. I'm doing well. Thank you.
You have a very beautiful view from your window.
No, that's not my window. That's the place I couldn't go to this year. I'm actually stuck in Iowa.
I'm sure it's equally beautiful. What's your question for Nick, sir?
Yeah, Nick, thank you for your interesting presentation. So I heard that the financial crisis as well as the pandemic now, so typically these crises nowadays put a brake on ongoing innovation efforts, or could be considered a maybe justification for ongoing digital transformation efforts, a welcome justification. If you look at history, though, crises often spurred new innovations. So I'm wondering, what new innovations in banking have you seen, or do you anticipate to come out of the current global crisis that we are all in?
Miguel.
Yeah, I you know, I'm sort of a bit repetitive, I'm afraid. I think that what's going to come out of this absolutely is customer service, because we can engage so much easily with more customers more of the time if we choose to and if we want to. You know, why don't we have 24/7 by 365 banking and deliver that to our customers so that they can use it? I mean, the technology exists, the bandwidth exists, the consumers, our customers have now got the technology. We can choose how we want to do that. And so, you know, we can adopt that. I think that the innovations that are coming out into the marketplace are going to be transformational, because we've suddenly had to say, look, everything's stopped, everything's up for grabs, and everything's about to change, because we don't know, and still don't know, when things are going to go back to normal. And therefore, what do we need to do to deal with the fact that we're suddenly dealing with customers, you know, who can do a Skype call or a Zoom call to us instantaneously. And then we say to them, actually, this is going to take us half an hour, or actually your transaction is going to take about 2 days, or please can you mail this to me, or actually I'm going to put a check in the post, but the post's running a bit slow at the moment because we've just had an election, or, you know, all of these different sort of issues that spin around. So I think that, you know, the big changes, the big innovations have got to be in customer service and speed of delivery. And when you get to speed of delivery, all right, is T+1, T+2, T+3 acceptable in a digital world? I personally don't think it is. I think that, if I went into a shop and used a physical credit card to make a transaction, which you now can't do, but we used to do, you may remember those days. And as I walked out of the shop, that shopkeeper received the funds from my transaction into their bank account to improve their cash flow. I think that'd be pretty extraordinary. There's no technical reason why that can't happen. And that change in process doesn't make any change to the market economics, the costs that you're charging for that customer to actually do that transaction, operate that transaction, and provide that service to his customer. And I think that we're going to be pushed very, very hard in the financial services industry to justify why things take so long, or why things are bureaucratic, why things are the way they are. And I think using the regulators as a fall guy for that isn't going to go down very well, because I think it's for us to deliver the efficient solutions for our customers, and for the regulators to challenge us and say that they're not safe for the market, right? Which, if we're taking a solution to regulators and not safe for the market, we probably need to get a different job, and to move forward the whole speed, delivery, execution of financial services, domestically within the US marketplace and globally as well. It's not a single nation problem.
Nick, thank you very much indeed, sir. Really appreciate you getting the summit off to such a solid and interesting and full of challenge start. Plenty there for us to unpick and discuss over the next few days. Nick, really appreciate it. Thank you very much indeed.
Thanks a lot. You have a great time in your conference.